Good morning and a very happy new year to all of you. This is Almus Market Mornings. We have already discussed the key themes to follow for 2026. So, in case you missed it, you can tune into our episode on 31st December. Okay, now while FX was quite mellow all this while, metals were having their time printing headlines. There is significant narrative playing out where the discrepancy in prices between physical silver and paper silver is essentially the COMEX futures, are differing significantly. In fact, there is some sort of a discrepancy even in the physical prices across various regions. Let's try to understand this more. Good morning, JK. What are you making out of these developments in silver? If I'm not wrong, there are also headlines coming out of India where 44 Rajkot-based firms have gone into insolvency due to this kind of moves. What does your wisdom say?
Good morning, Swaraj. First of all, very happy new year to all our followers. I think first of all, let us understand that these precious metals and even to some extent some of the base metals also, they are in a very big cyclical uptrend, and this is also happening not just as a trading but as a shift in the portfolio allocations, and there is a certain amount of debasement also that's happening against the fiat currency. If you look at it, metals are gaining not just against the dollar, but they are also gaining against most other currencies. So, in this background, if you look at the silver moves, it had been dormant for several years. It remained dormant even after gold started moving in the year 2025. And middle of the year, we saw the break up and 32 levels, which was a strong resistance for silver against the dollar, that broke. And years of dormant moves, and whenever there was an up move, there was a selling that was happening, that shifted, and we saw a quick move up, and the metal actually gained more than 100% in very quick time, and then continued to rise, till the end of the year. And now, what has happened is at some point there are people who take view that it has moved enough, and it's worth the risk reward for being short in the metal. So that is where the vulnerability comes in. And when more people take such a position and the market is in no mood to give up the trend, that is where you get caught. And that is precisely what has happened in the physical market. And at some point or the other, every seller of the metal, physical metal, has probably taken a view, and that's created a huge gap between the exchange price and the physical price, because at some point you have to fulfill their commitment either to the exchange where you're gone short, or to the clients to whom you are sold. There also you have to fulfill the requirement. So that is where this is, and this is likely to continue because the trend in these metals has not really changed. In my view, I think if the trend continues and if the dollar does not strengthen majorly this year, three-figure mark on silver is not ruled out in the year 2026. And one more thing that you would have observed, or is likely to continue to happen, is that people who are short in silver or who have made losses in silver are likely to sell other assets also, because to make up the losses. And one of the clearest evidence was seen in the gold against silver ratio, which was ruling almost, it had touched about 95 during the years, now below 60 also. So people have been accumulating gold, and just to, not to pay a high price in terms of dollar or rupee, people have also sold their long gold positions and bought the silver. So that's also reflected. So this is likely to even impact the stocks also if the trend continues. So that is something that we should bear in mind. So this situation is not surprising, but it was always at some point it was expected to come, and but it has come very fast. Otherwise, I think markets are still in a New Year celebration mode. And today being Friday, don't expect many traders to return today to their desks, and most likely they will be in only on Monday, when we can start seeing some moves, some news, some data as well. Mainly the US jobs data for the month of December, which will be a fully surveyed data and more reliable. That's what we are looking ahead to. Yeah, I think for the rupee, possibly the at least for the initial time, we expect the rupee to continue its current trend of weakness, because for rupee's trend to change, there's a big shift that is required. Just to give you a perspective, for the last 10 years, the FII flow on a year-on-year basis has been around 87 billion, and it used to be over 100 billion in the previous 10 years. So there is a shift that has happened in FI flow pattern, and it is down to much lower levels, in the recent 2-3 years. And of course, in 2025, it has been net negative. So that makes a huge difference for the rupee moves, and there is not also accompanied by the fact that the net FDI flows have also been almost negligible, because gross FDI inflows were higher, but there were also good amount of FDI outflows. People selling their stake and repatriating. There have been large investments made by Indian companies abroad for acquisitions. All these things. So this is one big factor for the rupee to be on the defensive. And secondly, of course, the India faced the highest tariff after China at 50%, and that had a huge impact on the sentiment and the exports sector as well. So these two big factors to turn around is what is required for the rupee to also make some sort of a reverse. And whatever RBI sells by way of intervention so far has not been accompanied by any fundamental shifts. Therefore, if they do sell, and I think at 90-50, possibly they will come and intervene again just to stop the market from moving higher. But that need not necessarily see a rupee remain strong, because we still have that negative gap as far as the supply is concerned. Therefore, initially, at least till we see some big shift in the fundamentals, two big fundamentals which I mentioned, think we should expect the rupee to be slightly on the defensive side, importers to be more active, and of course, the the exporters will take a very gradual approach for their hedging as well. We have also in India important budget coming up in a month or so. Yes, I think been a lot of expectations, growth oriented, reforms oriented, market friendly. All these things could keep our asset markets also somewhat supported. But eventually, just to repeat, I think without a shift in the flow pattern, it's very unlikely that the rupee will make much of a gain. But of course, it can remain a bit subdued for some time until the budget at least. Thank you.
Thank you, JK. And yeah, so when it comes to the precious metals, of course, silver being quite significantly tracked, there is a lot of action over there, and those who have missed out on the rally, especially on the retail side, they are piling on the physical silver, and that's also causing a lot of demand over there. And then there are the traders who are expressing their expectations of a move lower, because a lot of the times in these kind of trends, the expectations to play, the wish to play contra also comes into play, and a lot of them have burned their hand. So what happens is that because financial market liquidity is like water, if there are losses somewhere, it will be covered from some other place. So it's very easy nowadays to shift asset classes. And so that's something that needs to be tracked. For rupee, we expect the initial weakness. Initially, the weakness may persist. The underlying factors remain the same as we had covered in the previous year as well. So till the time those resolutions happen, we may be on the underperforming side. That's it from us today. Thanks for listening. Have a good weekend. We'll catch up on Monday with the fresh round of updates.